Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Robert Mennella. He is a financial market analyst, friend of the show. Welcome to the pod.
Thank you, Arco.
So great to have you on, my friend. Robert, how many years in the financial markets for you?
I was first licensed in 1989.
Wow.
And that was my introduction to the wonders of the stock market. And I was actually quite fortunate to start at a company where they really valued education as well as salesmanship.
Okay.
And so there was some required reading. We'd discuss, and it was more than just a job. It was a camaraderie.
Yeah.
And when I got started, and that was my initial interest in the market.
Okay, but that's like 2 decades, right? So
3.
you've been there, seen it all. And I guess my departure point is people starting out these days, there wasn't like a Twitter or Reddit or LinkedIn or all these social media platforms that people could go to. And you touched on it so beautifully when you said there was an education and a camaraderie between, the place where you started, where if you go onto Twitter, there's literally, or LinkedIn, there's a little bit. We'll get to the LinkedIn part later. But it feels to me like you are forced to choose two sides. You are either a bull, which means that for people who might not be familiar, you just longs or you just buy stocks, or you are a bear and you just sell or short stocks. There's no in between, and it just feels like there is this constant pressure on everyone to pick a side. What is your take? Where do you think that comes from? And like, what is the effect on someone like, that's just maybe starting out his journey?
Right. Well, I think the first thing you need to determine is whether or not you're a long-term investor or a trader.
Yeah.
Right. So if you're a long-term investor, historically the market has gone up over long periods of time, 10 years, 20 years, 30 years period of time. And if your time horizon is that long, then certainly you want to be invested in the market, and you want to be long, and you want to take a low cost approach.
Yes.
And for a long-term investor, you don't really watch stocks.
Care about those. Yeah, you don't care about those stuff.
You don't care about those. But if you're a trader, or, not necessarily a day trader, but if you're a swing trader, or if your portfolio happens to be, weighted, allocated a lot to individual stocks, you might be concerned about the market bouncing around a lot. But I think what's happened with the, like you said, the social media platforms is, everybody has an opinion, right? And those opinions, they form their own biases. Yeah. And it doesn't matter if you've been in the market for 2 seconds or 2 decades, right? People are going to think that their opinion is more valuable than yours. And I think what's really happened out here is that people their biases have gotten really the better of them. That's the better.
Yeah, that is such a good point, just to latch onto that bias, because for me, 5-6 years ago when I started, I used to hate the market going down, right? And I couldn't explain it. And I guess there wasn't really someone to explain it for me. Why am I feeling what I'm feeling? It's that I had this constant long bias, even when I could start to see, hey, this market there's going to be a correction, whatever. I was almost afraid of taking a position because of that bias. So that's a very good point that you're bringing up.
Yeah. And I think that if people are going to do better than what the market has been doing with all the volatility, is they're going to have to be more flexible. Even the individual investor needs to take more control of their investments, because I've been there and I know what goes on inside the industry. If you just leave your money with a financial advisor, you won't really get the white glove approach like you deserve for yourself. And so if your money is important to you, you shouldn't always just necessarily rely on someone else to take care of it for you. And if you're going to, there's nothing wrong with that, but just make sure you're going to be an active participant in how your money works, and make sure your advisor meets with you and connects with you, just to make sure that you're not being tossed to the side. Because the bigger their books get, the less important you become as an individual investor to them.
Yeah, that's unfortunately the truth. Let's talk a bit about this current US market climate. We've seen this big correction. Most people tend to think this is a bear market in a secular bull market. This little pump that we're seeing on tech and SPX, it's squeezing a couple of shorts at the moment. What is your take technically? What are you seeing?
What I'm seeing is that we did hit a top back in January.
Yes.
We have had some backing and filling as far as the market goes, but the trend has definitely changed to the downside. After we hit the death cross, the 50 goes below the 200. The market did make some recovery from there. You did see some short covering. So I think the most important thing about what's going on in the markets today is there's a huge disconnect between value and price.
Yes. And
that's been going on for a couple of years now. And I think Warren Buffett said it best when he said the market has become a casino. And if the market is a casino, then you want to use some tools to better your odds. And those tools, things like technical analysis.
Yeah.
And you find more people, even fundamental people, are gravitating towards technical analysis a little more because, it's rooted in real history. I mean, Charles Dow, invented technical analysis. So let's not lose sight of the fact that it does have some importance and some weighting in asset allocation and investment advice.
Now, I'm 100% with you. I jokingly say, the macro might be right in the long term, 99% of the time. But if you're trading pure macro, you're going to blow your account more often than not if you don't have something at least to give you a short-term view. And even there, where the technicals are often referred to as having a crystal ball or fortune telling, whatever, by those proponents that really understand it, it's just about giving you a very short time frame perspective of probabilities of, what's going to happen. It's not a clear-cut case of, 100%, never 100%, but if it's a high probability, at least then you can make those kind of decisions for yourself. Would you agree with that statement?
Yeah, absolutely. I think that for the average investor, even if you're a long-term investor, you can do things like move your portfolio to cash. When you think the market has gone really high, your advisor won't be too keen on that because he doesn't make fees when portfolio sits in cash. But just things like, you don't have to go short as an individual investor long-term. You can just sit in cash for a while. Wait for the market does correct. Wait for those corrections. And when the correction seems like it's over, it'll start moving in the right direction. And then you could put your money back to work again. So, and I don't think every investor needs to choose between being an investor and a trader. You can have some of your money allocated to long-term investments and some of your money allocated to to trading, if that's your thing and you want to spend the time and the effort to manage it. But it's certainly not something you should just do on a whim without thinking about it and just go on a couple message boards and think you're going to make a killing overnight, because a lot of people, they got sucked into a lot of cryptocurrencies and lost all their money. And I think that's a hard lesson for a lot of people to learn. But you do have to know what you're doing or have some sort of competency as to where you're putting your money and what you should expect from it.
Completely agree with you. You're talking about jumping on social message boards. I've seen a significant growth in your LinkedIn content. I think I've been following you just before COVID hit, posting a couple of stuff. What is your, in a financial analyst capacity, putting as an content creator, what is your journey like being on LinkedIn? How has it helped you has it helped you grown? Because I just see a phenomenal increase in your engagement, which is awesome. So I'm very keen about that.
Well, I'm going to throw this one back to you, Rocco, because actually you had a lot to do with it.
No, stop it.
No, I'm serious. After we did our couple of podcasts a few weeks ago, my connections and my views and my posts all really started blasting off. And so I wanted to thank you personally now because
that's awesome. I'll take that. I mean, that's what the SGM platform is for, is 100%. to basically put a magnifying glass. But if you aren't putting in the effort, then and there's nothing to magnify, then really, what are we even talking about?
True. So I started my LinkedIn journey probably about 5 years ago.
Okay.
And I started just writing, a couple of things related to the financial markets. I was also on Facebook and Twitter when that stuff first came out. I'm no longer on either of those. I've just stuck to LinkedIn just because of the quality of the connections and the people that you meet on LinkedIn. Just seems to allow me to increase my knowledge of things that I'm interested in. Okay. And it's not about slamming somebody for their opinion and getting into quibbles like you do on Twitter, for instance.
Yes.
But I think that LinkedIn is really a nurturing place for people who want to learn about things that interest them. And I think hopefully in some way I've been able to give back from what I've learned. Okay. And a lot of content that I've created just comes from my technical knowledge and kind of my journey as a financial advisor, where I try to incorporate, maybe a little humor and a little interest and a little news and a little education into my posts to try to condense my thoughts into, something a lot shorter than a book, but will be interesting for people to want to look at.
Yeah, I think you hit the nail on the head there, because last season I spoke about, this whole value versus entertainment concept of education. And I've realized, or I've noticed that your posts there's a funny element, but it's not like funny haha, but it's just like if you're in the space, you catch up. Is that something that you've brought in with like a clear, what I mean is I need to do this, or is this something that just sort of happened organically?
It just kind of evolved, to be honest with you. At first I just started talking, and then I started using some of the stock charts to explain what I was talking about. Okay. And just as of late, I started to annotate a lot of my charts with lines and comments on the chart, just to bring some more context to the content and what I'm talking about. And I think that's really was one of the reasons that I've been able to get more connections, because I've made the posts a little more interesting.
Yes.
And I've been trying to continue to evolve my posts as the news cycle happens so very quickly.
Yes.
I get bubbles in my head. Wow, I think this would make sense to talk about this.
Yes.
And I try to put out a headline that's an attention grabber.
Yes.
So I think they call it clickbait in the business. But I want to put something out there interesting that'll make people grab people's attention, because on social media platforms you really only have a couple of seconds to grab people's attention before they move on to the next post.
And I think one of the points with this podcast for me is that if there are other financial content creators out there, they need to realize that yes, it is about giving value. It's about educating, because educating is king. But if it's not done in an interesting and entertaining, I'm not talking about valuetainment, I'm not talking about fluff and stuff like that. But if you're not grabbing someone, then at the end of the day, the effort that we're putting into education, it won't land. And I mean, that's just, I've seen it, I've tried it before. You go in with these complex like charts and just like you almost talk over their level, and then you just realize, hey, I need to dumb it down. I just really need to dumb it down and talk to people on their level and like recognize, hey, everyone is on your level. And I think when you start out creating content, it's really difficult to do.
Yeah, I got a really good piece of advice from a very famous author. His name is Lee Child, and he's done some of the Jack Reacher books and movies. He was a client of mine when I was at Chase, and I asked him, why do you think you've been so successful? He's got 22 or 23 bestsellers, movies with Tom Cruise and so forth. He said, whenever you're writing something, he was giving me advice on, if I wanted to write a book. Yes. He said, if you're writing something, write the book or write your content for your readers. Don't write it for yourself. Right. So that made a lot of sense to me, because when I'm writing something, I'm trying to impress the reader. Don't try to impress yourself, right? Yeah. Because your reader is the one that you want to get the attention from. You're not yourself. So that was a really good piece of advice that a very famous author gave me, and I try to use it as often as possible.
That hit so hard, because I remember writing posts that I liked, content that I liked, and it got nothing. And then I'm like, what is this? And it's about it's not resonating with people. It's not hitting. So, I mean, I can just as well talk in a vacuum. Robert, thank you so much for joining me today and sharing a bit of your journey and your knowledge with us. If the listeners want to connect with you and like find out more about what it is that you do, where can they do that?
You could just DM me on LinkedIn. I'm right there, and I get back in touch with people, very quickly. Got a bunch of satisfied customers already from when I started doing my tutoring a couple of months ago, and that's going really well. And I'll continue to do that. And I'm working on a couple other projects that I'm going to keep secret right now, but I'm going to reveal them down the road as I continue to evolve on my journey here on LinkedIn.
That's great. And I look forward to having you back on. Robert, thank you so much for joining us. To our listeners, peace, love, and prosperity. And we'll catch you in the next one.